Hello guys, and welcome to another Elliott Waves from Cryptos. It's been a while, actually, over a week, maybe since I did the last video, and apologies for that, but I had to prioritize being a father. So we are back on and taking it slowly as I'm trying to recover the moves in the markets. Not much has changed since we last talked about the BTC structure. I mean, the structure that we last talked on the last video still remains unchanged because we haven't seen any invalidations just yet. So we remain uh, bearish for the correction in wave 4 to continue a little bit lower down to around the 23k area. For that, of course, we have to go into the trading view charts and really have a quick look through of how we expect markets to behave from now and what invalidations points we should really pay attention to. So before we do go ahead though, do know that none of this is investment advice. It is educational. And also do not forget that you can subscribe to ensure that you follow my videos that have been quite rare over the past week or so, but slowly so we're going to start multiplying them as days gets past, and I'm getting used to this thing. So without further ado, let's go to the charts, guys. For BTC USD, this is what we're going to look only today. Just a quick update for you because we've been actually waiting for an update, and from there we see probably on Thursday or so we're going to have another video in a couple of days. Guys, I always like to start with the short term because it's what this is the most important to at least for you, I would assume. Since you've been following, you know what's really I'm expecting, what's really going on in the long term, what I'm expecting in the long term. So I'm going to start with the long term, and I'll explain the short term, and I'll explain what I'm expecting over here. Last time we talked about this turning into flat in wave 4. Okay, we're looking at 4 and then we're expecting 5. Some of you think that wave 5 might have ended over here and then we're going to continue all the way up, and that is of course a probability, and I'm going to tell you how the alternative is going to look like. But for the time being, since we are trading below the 38125 and the 41266, we still remain bearish in the medium term, okay, short and medium term. With that said, last time I talked about this becoming 1, 2, 3, 4, and 5. Well, we had an extended version, which was one of the variations of the main scenario, and we went down to 21,183. We did have a fresh low, okay, and this to many people means or could mean that, okay, with a fresh low now we are going to really head up, because last time we had a very good pin bar, and now we're getting pretty much something similar with smaller volumes indeed, but with that new low coming in, many believe that this is going to be the game changer. I don't think this is the case. It's just a wave 1, okay, that of course created a new low in order to to trick a lot of the retail trading. Now, we've talked about ABC after this correction, after this impulse move to the downside, and that comes into an ABC structure. It looks like it, okay. We have a leading diagonal in wave A, okay, which is 1, 2, 3, 4, and 5 with a big extended wave 1. We've had an ABC in wave 2, very obvious one, and then we've got wave 1 because we have a 5-wave structure up here, okay, wave 2, and then we have like 3. I'm expecting 3 to end a bit higher, then we're going to get 4, and then we're going to get 5, okay. Now, if we pull the Fibonacci retracement from 4 down to wave 1 to 29,183, we go past the 61.8 Fibonacci extension retracement, okay, of this move to the downside, which seems to be like a case now that this is really a false break. It could be we might get 4 and 5 and then continue moving lower, or we might move a little bit higher and then get the wave 4 and then get the wave 5. to the 38,111 or near that level. This is also just a tad lower, a tad below than the 78.6 Fibonacci retracement to the downside, okay, 38,277, which means, you know, if we use like the sort of, let's say, a pivot point between these two Fibonacci retracements, we get about around the 37 or so, which might make a bit more sense, because if we get closer to that level, we want to not get to the 78.6 because it would invalidate the first wave to the downside over here, right? So, which means my invalidation level is 38,111 for this particular scenario, right? Which means 3, 4, and 5, or 3, 4, and 5, okay? And then move down, or 3, 4, and 5 and move down. Anyway, this is the area here that I'm expecting to see prices start moving lower again, okay? And continue in wave 3 of wave 5. Now, if we break above that invalidation level, does it mean that that's it? We ended down here. This is 1, 2, 3, 4, 5. That's my 5, and continue up higher? Well, not necessarily. It is a variation of the alternative scenario, but I believe it's not even alternative, it's just a variation. I believe if we break above that level, okay, most likely what we're going to see an ABC over here, another ABC over here, and that is going to turn perhaps into an ending diagonal, okay, because ending diagonals are 3, 3, 3, 3, 3, 3, 3, 3, yeah, 3 structures, 5 times 3, yeah. So, which means that would be that scenario. And why would that be the case is because in ending diagonals, yeah, wave 2 and wave 1, yeah, can interact with one another. Wave 1, 2, yeah, of course, then 3 and 4 as well, right? But usually what happens in ending diagonals and leading diagonals as well is that we get deep corrections where we receive a sign that we're going to get a motive wave, okay, not an impulse wave. This is what is the invalidation for the impulse wave. If we break above that level, then we go to the motive wave variation, which means an ending diagonal. Only when we break above that level, okay, I will start considering the alternative scenario. And the alternative scenario is that, you know, we finished down here, and then we're going to go 1, 2, 3, 4, and 5, which means this is a multi-structure move to the upside, exactly as we see it as well here. That is 1, 2, 3, 4, 5. So we expect 3 to be larger, and 4, that will be 3, 4, and 5, right? But only when we break the 41, 266, 267, whatever that is. Now, there is also a lower probability scenario that this is 3 and 4 has not finished yet. Yeah, which means that's ABC for W. That's going to be maybe, well, yeah, an ABC for X. And that we're going to get another ABC for Y. That's going to be a W, X, and Y, with a W being a flat, X symbol zigzag, and Y probably a symbol zigzag, unless if it turns out being some sort of diagonal over here as well, right? Now, if we start moving lower, before we even get to this or this level, because it could be a case what we'll start moving lower now, right? What I will be waiting to see is the break of, obviously, wave 4 and then wave 1 over here, okay? Once we break below wave 1 and 32K or so, I will be expecting the break of this level and then the previous low. And from there, it means that most likely the main scenario that we've been looking and expecting all this time is going to take place, okay? Now, before we go and look at the long term, let me tell you that I'm expecting prices to go to around the 23, 24K or so, with 15% deviation around the 23 price that you see now, 23,453. Yeah, for us to start moving higher. I might be wrong, but even if I'm wrong, I will still tell you. Invalidation 1, invalidation 2. Okay? Do not forget that. And it's not a case whether it's wrong or right, but anyway, we're following here the Elliott wave guidelines, okay? And I'm expecting the 23453. Now, where are we supposed to go? Okay, there is different ways, as we said in the last video as well, to consider where we're going. One is to take the length of wave 4, yeah, and go the wave down, and look at this, we're going near the 17k or so, okay, which is way beyond the level I'm expecting. The other thing we can do is measure wave 3 and assume wave 5 is going to be identical, or wave 1, but most likely in cryptos wave 5 and wave 3 are identical, or even wave 5 is larger than wave 3. The other thing we can do as well is take wave 1, because we have that already in, yeah, and go and work out, look at this, the 61.8 comes exactly at where we're expecting to go, okay? Although the truth is this, the 61.8, it would be expected to be most likely a target when we're looking at an ABC rather than a 1, 2, 3, 4, and 5. With that said though, do not forget that if wave 3 gets here, which means it's an ABC and 1, 2, 3 is the same thing, the wave 5 could be something that is very tiny down here. So we'll get the wave, the 1, the 2, the 3, the 4, and then the 5 could be just something below the level that we're expecting, 23, 4, 5, 3, and that will be it. Okay, but look at this, it's very interesting to see, right? Now, the other way to measure something like this is to take into account the retracement, okay? But we do not have the retracement yet, okay? What we can see, and we can make that assumption, we can see that the Fibonacci from A to B over here brings us to the 36,711. So this is one level to watch. At least I'll be watching that level, because we might miss getting to the previous high over here. But the next closest levels to watch is 36,711. Now, we need to see if there is any sort of cluster that is being developed around that area or not. So we're going to take waves 1 and 2, the Fibonacci over here, and look at 61.8, 38.2, and the 50. Look at the 50 over here. It's 36.67. Okay, it's 1.5. Well, it's 1, 2, 3, 4, and 5. So on a structure like this, it's more likely to be an ABC thing rather than anything else. So it's better if we go at the 61.8, 37,350. So the area between 36,711 and 37,350 could be where our wave 5 is going to end over here, right? That will depend, of course, on where this wave 3 is going to end, okay? Because we've got the 1 and 2, which is overextended here, yeah, 1 and 2, sorry, 1 and 2 over here. Our wave 1 is extended over here. Our wave 3, you know, ideally should be, you know, like 61.8, but in that case, we assume is going to be a little bit lower than that. When that happens, we usually get ending diagonals, okay, or diagonal structures, because wave 3 being small doesn't necessarily mean that it's going to be, you know, a diagonal, but when it is small and then it comes in the territory of the previous wave 1, then this means most likely it's going to be diagonal. So if that is going to turn a diagonal, then that means that's not a leading diagonal, okay, because we cannot have a leading diagonal and an ending diagonal in the same symbol zigzag. Symbol zigzags can have only one motive wave, okay, not motive wave, one diagonal structure, okay? So it's either this will be wrong or this will be wrong, just so that you know. So in case we break below that level and then we'll start moving back up, okay, most likely it will mean that this is 1, 2, 3, 4, and 5 rather than anything else, okay? So what I'm saying is that don't really you know, take this too hard with what it is. This is leading and we're expecting a 5-wave impulse to finish a bit higher up. If we get that break, then this relationship is going to break, okay? Now, quickly on the long term. Actually, I haven't finished here. Let's assume, guys, that we're going to go and finish at the invalidation level, okay? to make sure this is an impulse. It's going to be a better case, of course, if that is an impulse. So we'll put that there, and we're gonna go and have a quick look at where we're getting with these sort of levels. Then I'm going to do the one, I want to do the 1382 to be fair. Yeah, and it comes pretty much very near to the levels that we're expecting. Okay, so if that happens, we'll come up here, we expect wave 320 at 27, then we're going to get 4, perhaps even around 30, 31, and then 5 down at our long-weighted 23, 24K area. And now, before we finish this video, for those who are wondering what I'm waiting for here, I'm waiting for an expanded, for an expanded flat variation to end down in wave C. Okay, and this is where, of course, wave 4 is going to be, and then we're going to get wave 5. If this doesn't happen, well, to me it looks like it did anyway. I mean, even 1, 2, 3, 4, and 5 here, still it's valid. But we would expect wave 1, wave 5 in this scenario to be a little bit larger than, you know, or get at least, or look at this at least. Actually, we'll just discover something else. Wave 1 and wave 5 will be equal exactly at our level. Did you see that? Did you see that, right? Let me just do that again. That's my wave 1. The rule, the guideline of equality brings me to exactly the same level. Okay, 23. So yeah, if even for the alternative scenario, guys, I think we're not done. The alternative would be triangle. We're finished up here. My wave 3 is up here. Or my wave 5 is up here. And we'll have 1, 2, 3, which is an ABC. And then that's going to be another B, and we're going to get 1, 2, 3 ABC. Okay, because it really looks like an ABC. And I don't think it's done. Okay, but as we said before, due to this structure over here, if this is an ABC, I want this to be an X, and X waves have to go deep. So the alternative is looking for upside, if we break that level at least, to go to and test at least this 47.54 before hell breaks loose, as they say. Okay, that is my last validation for downside, guys, and that will be all for the day. I hope you enjoyed this video. You can leave your comments. You can leave your analysis if you want, guys. Ask your questions. I will try to get back to you as soon as I can. In case I don't worry, it means I'm busy, and one way or the other, though, I'll try to respond within 24 hours anyway. So thanks for watching, guys, and we'll speak again hopefully soon.